Vietnam's stock market were able to finally show strong gains in the months of August, after the government successfully contained the second wave of COVID-19, which broke out in July this year. And currently, if you look, new infection rates are trending back to zero. Hi, I'm Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. There was overall euphoria and optimism about the economy, and both indices, the Ho Chi Minh Index and also the Hanoi Index, were up strongly. Also, our fund managed to perform plus 8.6% in August this year. So this was, by the way, the highest reading since January 2020. So we are quite thrilled about it. So unlike in June and July, where we saw the first half of the months starting quite optimistic and quite strong, the second half gave normally everything back. August was a different game, and we really followed through. This was mainly due to the banking sector, which was quite strong. So some of these banks were rising 20% only in August. But also other sectors helped to support the market. But if you look at the index levels of Ho Chi Minh, unfortunately we are not yet back of the same levels as January 2020. But we are at the same level like 6 months ago. So also the market breadth, which is the advanced decline ratio, started to turn positive. So that means there were more stocks advancing than declining, and on a cumulative basis the trend is clearly showing upwards. So part of that optimism, as I mentioned, is COVID-19, because the second wave really has been able to be contained by the government. I mean, the government took quite drastic measures. You know, the pandemic broke out, the second wave broke out in Da Nang, and they immediately closed down the entire city, and also the neighboring province Quang Nam. They had a full lockdown. That really helped to stir confidence in the Vietnamese population, and also foreign investors looked at that quite positive, how they were handling this pandemic and how successfully actually they were. Also, testing and the contact tracing have intensified, with around 57,000 people being medically monitored and quarantined. And as a result, the new wave, the new infections is really trending back to zero. If you look at overall numbers now, we had around 1,040 infections during that second wave. Unfortunately, 32 people died. And these numbers are as of the 31st of August. But also now, today is the 2nd of September. This morning we had 0 infections, so things are starting to look more and more positive. If we look about risk-reward profiles around the globe, I think Vietnam is probably one of the most attractive if you look around. I mean, central banks distributed helicopter money in the US, in Europe, around the globe, whenever you look at. And this has obviously had a strong result in terms of stock market performance, which is not necessarily reflecting the real economy, but the US stock markets, especially smaller number of US tech stocks, performed outstandingly well. The Western central banks, debasement of their currencies has certainly also helped, but other markets so far were lesser successful, especially if you look at Asian emerging markets and in general Asian frontier markets also. That has one thing to do with limited financial resources of their governments, but also a different approach. So they, in terms of how they look, how they locked down their countries and they didn't open their borders. So you could argue they are an economic victim of their own success fighting this pandemic. So if you look at the performance of these various indices around the globe, so one of the most stunning performance was shown by the Shanghai Composite Index, which was year-to-date up 12%. That's as of the end of August. The S&P was up 8.6%. Then the Eurostoxx 50 declined by around 5.5%. And then Vietnam minus 8.3%. But if you look at Thailand, for example, the Thailand Sept index was down 20%. In terms of valuations, as I mentioned, the US especially had a very strong performance, but also valuations are now, if you look at the PE ratios, they are at 27.3 times of the S&P 500 in the US. And Vietnam, we are at the lower end. We are at 14.7 times earnings in Vietnam. If you look at the VN index, and if you look at our fund, we are at 6.7 times earnings as at the end of July. So the numbers of end of August are not yet out, but still significantly lower. So if you look at Europe, for example, they were expecting and hoping for a V-shaped recovery, but this V-shaped recovery, as we have seen in the Nasdaq, especially in the US, has not yet happened, and the momentum of economic activity is running out of steam, it seems like. So Europe will probably face some challenges to really successfully have a V-shaped recovery. But we'll see. On the other hand, if you look at Vietnam, they are probably in a much better position than many other nations, with main economic drivers such as the export sectors already showing some growth again, and whereas other countries facing sharply declined trade figures currently. So the Vietnamese government at the moment, they are reiterating their aim to disperse around 27 billion US dollars, which is quite a big number for Vietnam, in economic support packages. And that's mainly for infrastructure projects such as the North-South Expressway, which is currently being built, Long Thanh International Airport, and the Mai Tung Can Tuo Expressway. So the Vietnamese stock market looks really quite undervalued relative to other markets, so both in relative and absolute valuation terms. Especially when we look at, or when take into consideration the strong currency Vietnam has versus the US dollar, the US dollar has actually not moved. The Vietnamese dong versus the US dollar has actually not moved this year. It's less than 20 pips of its starting price. So it's almost unchanged. And given that we see a positive 2020 GDP growth this year, which is quite extraordinary if I look at surrounding countries, that gives quite a lot of optimism. Also, we see that in foreign direct investments, which are continuing to coming in. So there is this manufacturing shift, as I mentioned previously, from China into Vietnam mainly, which is continuing. And also European companies now are starting to set up their production facilities in Vietnam. So let's have a look at the Vietnamese real estate market. The Vietnamese real estate market is quite a hot topic in Vietnam. So if we look at a recent study done by VN Express, that's an online platform or a website, we see that the real estate is the first choice of Vietnamese, with almost 30% of the respondents saying that they want to allocate their capital into real estates in Vietnam. On second place were bank deposits, third place gold, followed by stocks and cash. And in cash they differentiate between the Vietnamese dong and the US dollar. Whereas the US dollar is almost treated like a separate asset class given Vietnamese past in terms of a few years ago, especially in the period after 2007, we saw quite high inflation periods where really the currency devalued versus other currencies, and hence US dollar was a safe bet, and that's stuck in Vietnamese way of thinking, so they treat US dollar as quite a safe bet when you go into cash. What else is there to say? Yes, the Vietnamese market obviously is supported by the broad part of the population, especially the affordable segment, so demand for properties for living purposes seems to be stable, so we believe it will remain stable for the foreseeable future. Given Vietnamese demographic position, also the ongoing urbanization will support that demand in that segment. But if you look at the demand for buying for speculative purposes, so buy to sell or buy to lease, then most likely that will be impacted negatively by COVID-19. So as I said, COVID-19 obviously had quite a negative impact also, like many other sectors in Vietnam, and with the government immediately imposing their social distancing policy, a lot of people had to stay at home and could not go out and look at new real estate projects. So the transaction numbers in comparison to last year were much lower. But saying that, after the government successfully managed to fight the first wave of the COVID-19 outbreak, the real estate market started to recover strongly. And transaction numbers actually jumped in Q2 in Ho Chi Minh 54%. So there were 2,430 units sold, so 54% higher than Q1 2020. Also, villas and houses were up strongly by 42% in Q2 versus Q1 in 2020. But as I said, if you take the Q2 numbers, you compare them to 2019, transactions levels are still far off from previous levels, and they're around 64% lower. But when we look now at this renewed demand which is coming into that segment, so if you look at it a little bit closer, so what really has happened? The apartment prices, they are probably at the same level or even slightly higher. But if we look at land prices, especially around Ho Chi Minh, they almost managed to double. So which is a staggering performance. You know, if you look, for example, at Dong Lang Thong area in District 9, the land prices per square meter into end of 2019 were around $1,000 to $1,200, and now they're currently trading between $1,800 and $2,000 per square meter in Dong Thang Long area in this District 9. So unbelievable, and there are a few reasons why land prices are going up so much. On one hand, you have the Vietnamese, which strongly believe the land prices will never fall, and so as soon as they can afford to buy, they are acquiring land or maybe buying an apartment. So that's on one hand a strong belief of the Vietnamese population, but then also we see that, for example, there's no so much supply, especially if you look around Ho Chi Minh. There are the land or the residential land reserves are quite limited, and all the real estate developers, they are really fighting to increase their land reserves and trying to get as much supply as they can get their hands on, and obviously pushing up prices. Wincom Group is the largest and most influential real estate developer, and they have a lot of pricing power. So they are, for example, pricing their Vinhome Grand Park projects near Dong Thang Long, which is around 25 kilometers from the city center of Ho Chi Minh, at 3,500 to 4,000 US dollar per square meter. And also the consumer behavior has changed due to COVID-19. So high net worth buyers, which previously were buying luxury apartments, are now buying larger land plots and building their own villas because they are scared of the density of population in big condominiums. So apartments blocks are considered as not that safe, and they prefer to have their own villas to live in. So that also has helped in pushing up the prices. And then last but not least, of course, lending rates came down. So they were, from end of 2019, the average lending rate was around 11 to 12%, is currently now between 8 and 9%. Some of you, of course, will now say 8-9% lending rates. That's crazy, that's so high. And it is in comparison to Europe or the US. But for Vietnam, that's we haven't seen these low rates for many years. So that's considered quite low. But who knows, it might go even lower. We'll see. So I guess, well, there's one more thing to mention. There was a PwC PwC survey done recently, and they looked at Asian cities and in terms of buying residential assets, what the demand of foreign buyers is, and Ho Chi Minh was ranking first as in terms of demand for buying assets or buying apartments in Ho Chi Minh, was by far number one, followed by Bangkok, Singapore, Shenzhen, Sydney, Tokyo and Melbourne. So it's quite interesting, that market, how it will look like in the years to come. Especially we see a booming economy in Vietnam that obviously will help to support that market, and that will probably mean we're going to have a bright future. And especially all these key real estate developers with big land reserves, such as Vinhomes or Novoland or Nam Long, they will benefit nicely from that market. So this is all for me as an update for August. You're going to hear from me the latest at the beginning of next month. Thank you for listening, and goodbye.